Live from Bloomberg's world headquarters in New York City, I'm Matt Miller.
And from our studios in Washington, D.C., I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, as regulators continue the crypto crackdown, we'll hear exclusively from one major player at the center of it all, Nexo co-founder Anthony Trenchev.
Plus, we'll get the view from here in Washington. We'll fill in the gaps on crypto regulation with Kristin Smith, the CEO of the Blockchain Association.
And Coinbase's latest results may show us how companies are weathering the regulatory storm. The crypto exchange reports today after the closing bell. Kaylee, clearly you're in Washington, D.C. I'm here. This isn't just a special episode. You're down there for good. Tell us why.
Yeah, I've moved down here. I am going to be taking a much closer look at regulation, specifically in the crypto space, Matt, because this is where the regulators are. This is also where Congress is, the people who, in theory, need to write the rules of the road to tell you which regulator has control over what. That is a process that is continually evolving. In many ways, we're still waiting for it to happen. So I'm here tracking all of it. But I got to say, Matt, I really miss you.
I miss you too, and I'm sure our viewers would, but you're going to continue to do this show for us, so we'll get to see you at least every Tuesday at 1 p.m.
Yeah, that's right. So I'm going to continue to be doing this show and tracking these digital assets. Let's get a quick snapshot of what is happening in the market today. Obviously, it's a down day for risk assets broadly, with stocks down pretty hard on the day. So maybe no surprise, you are seeing cryptocurrencies moving in tandem with that. Moving lower, that is. Bitcoin right now trading at $24,600 so dollars, down about 0.5%. So we are off of session lows. And remember, that $25,000 level proving really difficult to break through. That is something that a lot of the technical strategists and really strategists across the board are watching. A little bit of underperformance when it comes to Ether, down about 1.4%. Right now trading at the 1,677 so level. Binance Coin, maybe a little bit of relative outperformance, but of course Binance and the regulatory landscape, something we will continue to watch. And then I wanted to point to Coinbase too, down about 2.7% in the intraday session, Matt. But of course, when the trading day is over, the closing bell rings, it will be reporting results after that. Will be really interesting to get the read from this company on what their revenue decline maybe looks like, and also how regulatory issues are impacting them and some of the businesses in which they are trying to diversify.
Yeah, absolutely going to be waiting for that to cross after 4 p.m. on the Newswire. I want to get, though, right now back to the lending space. Nexo is one of the last big crypto lenders standing, though the London-based business has been under pressure as Bulgarian prosecutors charge 4 of its executives with crimes ranging from money laundering to organized crime and funding terrorism. The co-founder, Anthony Trenchev, responded to those allegations in an exclusive interview from Dubai.
The charges are ludicrous. There's no other word for it, and it is slowly unfolding for what they are. They almost completely forgot about the 2 of the loudest charges, which you just pointed out, and they're grasping for straws to make a case stick.
You were a member of parliament in Bulgaria as well, if I'm not mistaken. Are you one of the people who's been charged?
I presume so. It is peculiar that we have not been contacted. I have not been contacted. I have not been served charges formally or informally. There was just this one press conference, one-off thing where they read a bunch of accusation, and we haven't heard of them ever since.
But I mean, as a former member of parliament, I have to assume that you're very well connected in Bulgaria. Through back channels, have you been able to find out more information? Is there any way that you're able to contest the charges?
I have mostly lost my nucleus to Bulgaria ever since we started Nexo. We deliberately chose to not offer our products and services in Bulgaria. So, I have been living abroad for almost 2 years now. I'm spending half my year in Dubai, where I currently am. So I do not have any back channeling options.
Across crypto, there have been problems with KYC compliance. There has been problems with onboarding, with compliance in general. How do you deal with that? Can you be sure, for example, that you haven't had any clients connected with Hamas, or that you haven't had any clients connected with organized crime?
Yes, we can have a very high level of confidence that we have one of the most stringent KYC and anti-money laundering policies and procedures in place. If you go on Trustpilot and read the reviews, it's always complaining how much information we ask from our clients. So we have an incredible team of 30 professionals, educated and certified, by the way, in the US to be certified anti-money laundering specialists. We have very robust systems in place. We use Chainalysis, Elliptic, all of those software capabilities which go beyond what is possible in the traditional banking system. All transactions coming in before they even hit our own wallets, we see where the money is coming from. We see and receive notification if there was an illicit activity, and we can block it on the incoming. Same on the outside. When you transact with a known address that is problematic, connected to illicit activities, whatever, we flag that and do not allow you to transact with that address.
In terms of investigations, are you under investigation anywhere else, in any other jurisdictions besides Bulgaria?
No, you know that recently we settled in the US, which if I ever had something hanging over my head and was worried about, it was the regulatory process in the United States. And we know we settled with all 50 states, the 3 territories, a bunch of different banking regulators. That's on the state side, and also on the federal. We settled with the SEC, and the only charge on the federal level was unregistered sale of securities for our earned interest product. This is like strict liability case, which is settled on a no admit, no deny basis. We pay a monetary fee, a penalty, which will be paid out across the next 12 months. And this is the pinnacle of almost 2 years of work of our gradual leaving the United States. So no, there's no investigation in the United States, to the best of my knowledge, our lawyers' knowledge, and we have been scanning throughout the planet to see, are there anywhere potentially problems, and there are none. It is a Bulgarian thing, what we discussed in the beginning.
So what about commingling of funds? This has been a huge issue, obviously, since the collapse of FTX. You're not using your borrowers or your lenders' funds, to invest in other areas. Is that correct? You're not commingling funds. And how do you make sure that that's the case?
Well, I think the first and most important thing here is transparency. It is okay to do investments if the investors and your clients know exactly what you're doing. So you have to be very clear with that in the terms of service, terms and conditions. I think we've done one of the finer jobs here. And it's no mystery how we generate the yield. We've spent many occasions, blog posts, newsletters, you name it, to provide clarity on that. We do have market neutral strategies that help us generate the yield that we pay out to our customers. We have the arbitrage between what we borrow at in terms of rate and then what we charge other people. So it is a plethora of different strategies that gets utilized, and it has stood the test of time. We are the last lender standing, so we have been doing something right.
An exclusive interview there with Nexo co-founder Anthony Trenchev. You can find the full interview on your terminal, or you can go check it out at Bloomberg.com. And it was a wide-ranging interview, Kaylee. We talked for, I think, over 20 minutes. And he talked a lot as well about the growth of his business, especially since Bitcoin has come back from $16,000 to $25,000, and the movement of really the core of his business from London to Dubai and the Middle East.
Yeah, it was such a great interview, Matt. Bravo on that. And I think his last point that we heard there about how they're the last lender standing, my question is, how long can they stand for? Do they expect that they're really going to be able to hang in there, considering so much focus, scrutiny, turmoil has hit crypto lenders in particular? It will be really interesting to see, from my perspective, how that evolves with the regulatory landscape, and ultimately if Nexo is going to exist as it does in its current form down the line.
Yeah, absolutely. I mean, they are pulling out of the U.S., so you'll hear less about it likely in Washington, D.C. But as we know, sometimes the U.S. even regulates businesses that operate overseas. Let's talk a little bit more, though, about the business of crypto lending, crypto credit, et cetera. There are others in the space. Bill Wolf is one of them. He's the CIO at Archblock, the creator of the blockchain credit lending marketplace TrueFi. And Bill, before we get into your view of regulation and the industry, tell us specifically about Archblock. You know, would you separate yourself somehow from other crypto lenders? I know you started, for example, the first, institutionally adopted stablecoin.
Sure. Yeah. So we really are two things. You mentioned TrueFi. That is kind of our base layer, open source marketplace for lending. It's a place where someone with a credit perspective can come manage a credit strategy, and lenders can come lend to it, and seekers of capital can come borrow from it. Our whole orientation started with the stablecoin business that we created as our first product, which was the first institutional grade stablecoin. It's still it's true USD. We don't own the economic rights to it, but we manage that on behalf of a consortium out of Asia. And so that's what we are. Archblock sits on top of that, and we're building SaaS software to enhance people's ability to run portfolios and access the TrueFi marketplace. So I know that's a bunch of different pieces that we do, but our orientation comes from our original founding in 2016, which was to be as regulatorily compliant and comply with all the rules that are out there. We just wish there were more and clearer rules.
So on that point, Bill, what is the biggest regulatory risk that you are facing? Is it just a lack of clarity and general uncertainty?
Yeah, it really is that. I mean, so we believe we're compliant with every rule that's been out there and is been stipulated. What's going on, and obviously what y'all are talking about on this show and is all over the media, is there's a lot of regulatory action going on right now, which is great because it says don't do this, but it doesn't give you detailed rules to follow. And that's what we're really waiting for. And we understand why Congress is facing a new technology and a new marketplace, and they have to take their time to regulate. But we're encouraging of that and welcoming of it, and working with lobbying associations, et cetera. We're participating in that process.
How do you see the evolution of this in terms of big picture, Bill? Obviously, there's a crackdown by regulators right now. We've seen prices fall dramatically, although we have seen a little rebound of late. Is crypto going to still be the way of the future? Do you still believe that there are use cases that, 10 years from now, we'll find it hard to believe didn't exist, now?
That is exactly our belief, Matt. We believe that that fundamentally there are a lot of great use cases for blockchain technology, but one of the best, if not the best, is the application to the financial markets, and in particular, the niche in which we're playing in, which is asset management on the blockchain. And while we hope that the adoption curve is not as slow as 10 years, we do believe that in 10 years you will look back and say this was totally obvious. And even though there's been a major setback by a lot of players, including ours, as risk has gone off and liquidity has gone out of the marketplace, there's not as much value in our system or on our platform or on others. We believe that the value proposition is there, and you just have to look at one thing alone. Instant settlement alone is a huge move forward. Tokenization of funds and assets is a huge move forward from existing technology and the way existing markets work. And we believe that that's going to be compelling, and that again, in the look back basis, we'll look back and we'll say, well, it was so obvious this was inevitable.
But in the more near term, Bill, can you give us more specifics on how institutional behavior in particular has changed over the course of the last several months?
You bet. So what we're seeing, and I'm going to address specifically investors that are on chain looking for investment opportunities on chain. That's shifted dramatically, and this is it's parallel to traditional financial markets where risk has gone off and people have gone into more conservative and higher quality investments. But there's still billions of dollars of capital that is mandated to stay on chain. A lot of that's in decentralized autonomous organizations or DAO treasuries, but there are also corporates that have treasuries that have to invest on chain. And that capital is looking for much safer, still good yielding assets, but things where they can totally understand it, like treasuries. And that sounds bizarre and maybe a little bit counterintuitive, that treasury products need to be on chain, because why can't someone just go through a traditional brokerage account? Well, a lot of these investors are mandated to do it directly on chain, and they can't go through a traditional brokerage account. So they're looking to invest in T-bills, treasury bonds, investment grade debt, and other high grade, high quality, lower risk investments, but on chain. And so that's where we think the market is evolving to, and that's what we're endeavoring to provide. And we think that's where the liquidity will move towards on our platform and other platforms as they look for that yield, but safer yield. We think, risk will come back. The circus always inevitably comes back to town, but it will come back in a much more regulatorily compliant way.
All right, Bill, we have to leave it there, but thank you so much for joining us. That was Bill Wolf of Archblock. And coming up on the subject of regulation and the current gaps in crypto regulation in particular, Kristin Smith, the CEO of the Blockchain Association, will be joining us.
To access all the latest data on news on crypto, check out CRYP Go on the Bloomberg terminal. You're looking at it. This is Bloomberg.
There are poor risk management practices. There's a lack of robust compliance. There's been outright fraud, as we've seen in some of these cases and these allegations, including that the CFTC has brought. And so what you're seeing, I think, generally across the sector is the regulators bringing to bear all the tools that they have available. So regulators can inspect, they can enforce, and they can regulate. The fastest tool there is the inspection tool. So through examinations, for example, the regulators using their examination and supervisory powers to look at the risk exposures. And then there's enforcement. Now that takes time.
That was CFTC Commissioner Caroline Pham discussing the variety of tools available to regulate crypto. Joining us now is Kristin Smith, the CEO of Blockchain Association, which is a Washington, D.C.-based trade association representing more than 100 organizations in the crypto industry. And given that, she is here with me in our Washington studio. So, Kristin, great to see you. We were just hearing her there talking about enforcement. And what we hear so often is that what we're seeing is regulation by enforcement. We have seen a spate of actions recently. Is there any reason to believe that the pace of that is going to slow down, or are we going to see more coming?
Well, first of all, Kaylee, welcome to Washington. There is a lot going on with Washington and crypto, so very appropriate that you are here. No, listen, I think what you observed is correct. We have certainly seen the pace at which enforcement actions, at which guidance and other regulatory actions are happening is moving very quickly. The problem we have is the way that many of these are happening is that they are behind closed doors, or they are enforcement actions or settlements related to very specific facts and circumstances. What we really need is a more open process where we look comprehensively at the entire marketplace, figure out the appropriate way to regulate different actors within the crypto ecosystem, and move forward in an open process where everyone can participate. What we need is for Congress to do legislation. That's really what we need. Unfortunately, that process is very slow, and regulators are stepping in the meantime, and it's certainly been frustrating from a U.S. industry perspective.
Well, so let's talk about Congress further then, because there was some hope that that may happen prior to the midterms last year. Obviously, it did not. Now we are faced with divided houses, chambers in Congress. So how optimistic are you feeling now that something bipartisan could get through? And if there is bipartisanship to be had, where would it be?
Yeah, well, I think it's a process, right? Obviously, with everything that happened with FTX last fall, we're in a little bit of a difficult position right now because a lot of people in Washington, those who were close with FTX and Sam Bankman-Fried, feel a little bit burned by what happened and a little bit betrayed. But I do have a lot of hope because if you look even at the House Financial Services Committee, this year they have designated a brand new digital asset subcommittee that's going to be focused exclusively on these issues. We have our team up on the Hill, Capitol Hill, every day at federal agencies as well, working to educate. We have more and more policymakers that are interested. So I'm hopeful. I'm particularly hopeful around stablecoin legislation. This is an issue that Congress has been looking at since 2019. There have been hearings in both the House and the Senate. Last year, we came really close to getting some bipartisan legislation done. So it's my hope that we can come out of the gate and that Congress can work to push forward that, because that's ready to go. The work has been done there. What we need to do, what Commissioner Pham was talking about, is we do need to spend some time looking at markets regulation, trying to figure out what are the risks. Because you have to remember, with crypto, the risks are different than they are in traditional financial services. And then we need to come up with a legislative and regulatory framework that's tailored to those risks. That's not going to happen overnight, but it's a process that I'm optimistic is going to be underway, particularly on the House side now that we have this new legislative committee.
Kristin, is it more difficult, given the nature of crypto assets in the blockchain, or is it easier to track money laundering or terrorist finance? These are some of the biggest allegations that I've heard, and it seems like it would be a breeze to figure out where the money's coming from and where it's going, but very difficult to nail down who owns those wallets.
Yeah, no, that's a great question, Matt. So centralized entities in the United States have to register with the Financial Crimes Enforcement Network as a money services business. This means they have to have a full anti-money laundering program, and they must know your customer. They must figure out who owns each account that they're servicing. And so the on-ramps and off-ramps to crypto are regulated, not just in the United States here, but all around the world. And what we have to fill in the gap in the meantime is, because this ledger is public, you can go and look at the blockchain and see all the transactions going back and forth. Because this ledger is public, we have specialized firms like Chainalysis, TRM Labs, Elliptic. These are companies that work with law enforcement and work with the centralized crypto exchanges to figure out where the criminals are, where the money is going. And it's actually much more transparent than we see in the traditional financial services system. So we don't think there's a problem there. I mean, certainly, yes, criminals will try to use anything. US dollars, by the way, happens to be their most favorite, medium. But, you know, I think that there are a lot of tools there. And one of the things that we're working on is to better educate policymakers on Capitol Hill and make sure that they understand these pieces. This is not where we need legislation. We need legislation on the stablecoin side and also on the market side.
All right, Kristin, we have to leave it there, but so good to see you. Thank you so much, and hopefully we can do this again now that we are both here in Washington. That was Kristin Smith, the Blockchain Association CEO. Really appreciate your time. Matt?
Let's get some crypto stories that caught our attention this week. BlockFi has slowed down its efforts to return certain digital coins back to customers during bankruptcy talks. BlockFi is negotiating with creditors over who can immediately recover these assets. The company filed for bankruptcy way back in November. It plans to either sell or reorganize its business now to repay creditors.
And there were job cuts today at Polygon Labs, which operates a protocol used to make Ethereum transactions cheaper and quicker. Polygon is cutting 20% of its workforce, or about 100 employees. It's part of a consolidation of its business units. And of course, those layoffs coincide with deep job cuts across the industry after the collapse of token prices last year.
And of course, today, after the closing bell, we're all looking forward to Coinbase. It is expected to report a loss of almost $600 million in the fourth quarter. It's also likely to post a plunge in revenue for the fourth straight quarter. The bigger problem may be that three key businesses Coinbase counts on for growth are under increased regulatory scrutiny. Those are coin custody, stablecoins, as Kristin was just talking about, and staking, which came under real fire from Gary Gensler and the SEC, Kaylee, after we got that Wells notice that to Paxos that stopped the minting of Bitcoin, of Binance Coin, BUSD.
Yeah, so many different regulatory actions, as we were just discussing with Kristin as well. And you, of course, have to factor Kraken into that staking conversation too, Matt. So all going to be very interesting to see what color we get from Coinbase around that. I would just point out the shares are down today. Coinbase is up 77% year to date. So it'll be interesting to see whether or not the results really can support that rally or throw cold water on it. Of course, we have to keep in context as well. It's still down about 65% over the last year. So very time horizon dependent on that one.
Yeah, exactly. I mean, I was thinking about how huge Bitcoin is up from its lows, but it's still down well over half from its highs.
Yep, still can't seem to break that $25,000 level. That wraps it up for us on Bloomberg Crypto this week. Coming up next week, Sheila Warren, Crypto Council on Innovation, CEO. This is Bloomberg.